Semirara Mining and Power Corporation's first-half results reveal much more than numbers. They unveil a strategic play as the company nears a pivotal moment. As the coal operating contract's expiry looms, and the government launches a competitive auction for new development blocks, SCC stands at a crossroads. How does a leading Philippine coal producer manage uncertainty? The answer is found in their deliberate financial choices. The company's operating story starts with contrast. Power division profits climbed sharply, offsetting the downturn in coal earnings. Consolidated net income inched higher, but beneath that modest gain lies a far more intentional narrative. By the end of June, SCC's cash reserves soared to 18.34 billion pesos, over 4 times their balance a year prior. This was no accident. Management consciously deferred planned coal investments, drew a fresh 5 billion pesos long-term loan, and withheld dividend distributions. Instead of stretching for short-term gains, SCC is building flexibility, preparing capital for a high-stakes bid that could define its future. Operating cash flow slipped from last year, as rising receivables and inventories weighed on results. Yet cash climbed because capital expenditures dropped by more than 80%. Investments weren't abandoned. They were simply postponed until there's clarity on the government's timetable. SCC's forecast for 2026 capital spending is down dramatically, especially in coal, reflecting a preservation of options, not just cost-cutting. For investors used to regular dividends, the absence of a payout is striking. SCC's decision to retain cash signals a prioritization of long-term resilience over immediate reward. The absence of dividends, combined with debt drawn while the balance sheet is strong, puts SCC in a position of financial strength rather than risk. Segment-wise, power underpins the stability SCC needs. Power earnings surged by 35%, contributing nearly 3/4 of profits, while coal faced steep declines in earnings and margin pressure. Operational challenges in coal production serve as a reminder that diversification can shield a company during volatile times. The government's bid process is still unfolding, with revised schedules pending. SCC hasn't revealed bid details or investment plans, but its cautious stance is clear. Liquidity is king, investment is paused, and flexibility is paramount until auction terms are finalized. Ultimately, SCC's first-half results are less about dividend windfalls and more about strategic reserves. The story is not of immediate reward, but of preparation. As the auction period approaches, SCC enters with robust cash, modest leverage, and diversified profits. Whether these reserves will secure its legacy depends on the government's terms, but the numbers send a clear message. SCC is keeping its powder dry,